Hey guys, GoldStreams here again. Talking about a trade that I took today, the 20th of February, it's on a Thursday. Now, it's an interesting one because gold's at an all-time high in its current stage. So it made its move in the Asian session. It came up and it came up to a previous resistance, so an area that gold has tapped into before. When I say before, I literally mean yesterday. So right now, as we all know, gold is trading at an all-time high. The resistance it created at 29.47. You can see I've marked it there on the chart as well. And that's sort of a very, very strong resistance. There's a resistance on the 4-hour time frame as well from yesterday. It's a resistance on the 1-hour time frame. And now, as you can see, gold is sort of creating a resistance there. I was only interested in buys today. I wasn't interested in sells. And I'll show you exactly in this video at some point why I wasn't interested in sells. So sells were a little bit tricky. When I say tricky, what I mean is we had a support for a previous support on sells. So on the 30-minute, it looks like we've got clean range, right? If you look at the 30-minute, it looks like we've got clean range of about 50 pips down to the next support. If you go down to the 15-minute, you'll see that it's not clean range and you actually have a support at 29.44. And then from that support, you've got clean range of around 40 pips. Okay, so sales weren't interesting to me. The previous 4-hour closed bullish. A lot of my trades at this sort of time when I come in and trade pre-London and London session, the bias is taken of the previous 4-hour candle and the 4-hour market structure. It gives you a really clear bias. So if you understand the 4-hour time frame and you understand how the previous 4-hour candle closed, then you can sort of predict where the next 30-minute candles are going to go, the next hourly candles are going to go to make up the next 4-hour time frame. So I was looking, it was a lot of waiting around, but I was waiting to see if we can get a close above, very simply, if we can just get a close above 29.47 today, right? So it was just a waiting game. I wasn't interested. Like I said, this candle actually ended up closing bearish. I wasn't interested in sales at all. So once this candle closed bearish, one of two things was going to happen. Either this next candle was going to come down, make a little bit of a bottom wick, and then come up and break the high, and impulse entries would have gone in there. But as you can see, as it's coming up, it actually doesn't break the high of the candle, right? For me, breaking the high, I need both the ask and the bid price to go past the candle for the high to be broken. The same thing for the low, right? So you have to be patient in trading. There's no point of trying to catch an extra 1 pip or 2 pips by having an early entry. You learn that from time of sort of being in the markets. It's better to wait for the ask and the bid price to pass the candle. That's how you know the high or the low was broken. So you can see here the low was broken, right? And I took a sell in a similar situation yesterday, but yesterday we had a 4-hour bearish close and like 80 pips to the downside to fill. Today we have market structure, right, which is literally around 10-15 pips away on the 15-minute time frame. So I wasn't interested in taking sales. Very simple, right? You have to keep it simple. Trading is not complicated. There's there's no reason for you to make it complicated. If you've got a support 10, 11 pips away, which I'll show you here, we'll go over to the 15-minute time frame in a bit. You've got a support 10, 11 pips away. You can't take a sell. You're going to have to wait for a candle to close below that support to show you that you've got potential to actually move down. So this is the support I'm talking about in the 15-minute time frame. Candle came in, it tapped into it, and it rejected off it. You got good range from there for, like I said, around 30 pips, but you're going to have to wait candle closures. When candles break lows and then come up and break highs, okay, this is volatile. This is a volatile move, right? And volatility will bring two things. It will bring either literally volatility, so the candle will be going sort of buy and then sell and then buy and then sell, or it could bring a lot of volume. right? So especially when gold is trading at an all-time high like this, and you see volatility in the market, you have to be careful. You have to be sort of very wary of how you're entering positions. And today I'll show you sort of how I entered the positions in this. And I closed a little bit early. I closed a little bit prematurely, but I closed at 1-to-1, and that's what I was content with. Okay. You have to understand that when you close the trade, you've made the decision to close that trade. There's no point of sort of seeing what you could have got or worrying about the money you've left on the table. You've closed your trade in profit, whether you've made 1% on your account, 0.5% on your account, 3% on your account. That's where you've decided to close the trade. If the market continues another 100 pips, 200 pips, 50 pips, that's not your money. All you can do is study that move, right? And be prepared for it for the next time. So just be comfortable with where you close your positions and understand that at the moment that you was closing your position, you was content with that profit or with that gain. Okay. The same thing in a drawdown and a loss. If you don't want to hold your drawdowns, you don't want to hold your losses, right? Understand how much you're willing to lose. It's the same thing when you're winning in the market. Understand how much you're willing to win. And if you see something you don't like, or if you expect the market to move in a certain way and it doesn't move in that way and you've closed your trade, that's your decision, right? You've closed your trade into profit, be happy. There's no point now of trying to chase the market or trying to continue chase trading to chase that move that you've missed, try and catch that money that you've left on the table. Don't risk your profits to trade and try and chase things, right? Just leave it as is. Walk away. You've taken your trade, you've made your decision, and that's what you did. But as you can see here, the first entry went in here as the candle was flipping bullish because it's a lot of volatility. And the candle came up and it gave us around 15 pips, I believe. And what happened here, I didn't close the position. I was really expecting gold to come up and tap into 29.50, right? Because when gold is trading all-time highs and there's nothing on the left-hand side of it because it's all-time highs, it tends to chase whole numbers, psychological numbers. So 29.50, 29.55, it tends to move into $5 increments, right? So that's what I was sort of aiming for. Now, the reason I took it as an impulse entry and I didn't wait for it to close, we had, if I'm not mistaken, around 8 minutes, 9 minutes for this candle to close. But this candle came down, it broke the low. So sellers tried to bring the market down. They couldn't maintain it, right? They couldn't maintain selling momentum. Candle flipped bullish, a lot of volatility, right? I'm expecting volume to come in, especially pre-London with the London session, and continue this candle moving up. So as the market now closed above the area, I'm already in the position. Okay. I'm not doing anything. I'm not looking to add any positions at this current stage. I've already got one position that I'm holding. Now I'm waiting for this candle to flip bullish. Once this candle flips bullish, the entry I already had, which wasn't my full entry, which wasn't 2%, I scaled into this trade, right? Was now I'm going to start moving stop losses. I'm going to start adding other entries and sort of expect the market to keep moving up at this point. So as this candle's flipping bullish, I'm adding entries, right? Right there, you've got one entry added, and then another entry goes in. Yeah, another entry goes in at some point here. I think as the candle keeps moving bullish, there you go. And now I've got 3 entries in this, right? So now I'm literally 2% in. So my first position was 1.5%, stop loss moved up, and then I entered another 1%, and then I entered, I think, another smaller percentage as well. Now I'm waiting for this candle to move up. With this volume and with this breakout, I'm expecting this wick to the left-hand side of the previous 30-minute candle to be no problem whatsoever. I'm expecting gold to fly past this, right? When you have about 3 or 4 rejections on the wick to the left-hand side, I didn't feel comfortable with it. I closed out 1-to-1, so all 3 positions accumulated to around 33, 32 pips when I closed. and I closed there, and that's what I was content with. I was worried that gold could, not worried, but I was wary that gold could reject. Gold could create some sort of a retest on that zone, so I closed where I was comfortable with. But yeah, thank you very much, guys, and look forward to the next video.